Okay, what I'm going to do now, first I want to thank you very much, thank all of you very much for your presentations. In order to save time, let me take 3 questions at a time, and just say who you are, and if it's addressed to someone in particular, okay. If not, that's fine. Back there? Yeah.
My name is Eloy Anzola. I'm a Venezuelan lawyer now residing in Miami. In the description that all the members of the panel have made, I think the situation of Venezuela is tragic. Although Mr. Dallen had tried to present it in a humorous way, I think we can see that what the population is going through is really very, very difficult. You have to talk to people who cannot find a drug, to cure cancer or to some cardiac problem. And Francisco Rodríguez has told us that the solution in a lab, I think, is simple. Let's get rid of price controls and let's get exchange controls also out, and let's have a real exchange rate. And you tell us that
Wait, excuse me, I'm going to have to ask you to just focus more on your question because we have so many people here, if you don't mind.
I apologize, Susan.
No, that's okay.
But you're telling us that in Poland this was done and Jeffrey Sachs was very successful. I think that we can anticipate some more problems in Venezuela because we're Venezuelan and not Poles. Do you have a roadmap that you can explain to us how to do this? Thank you. I'm sorry, Susan.
Okay, no, I should have announced it beforehand. That's okay. Thank you. Good question. Next question. Anyone have one? Raul?
Raul Valdez-Fauli, and this is not a question, but a very brief comment. You have forgotten to mention the essentials that are being imported in Venezuela today. Before Christmas, they imported 3,000 tons of Scotch whiskey. 2 weeks ago, they imported 400 tons of Scotch whiskey. And before Christmas, they imported 27,000 tons of firecrackers for Triqui Traqui S.A. That really goes into making the Venezuelan population happy.
Thank you. Next question in the back there? Yeah.
Yeah, hi. Russ, at $18 billion a year in imports, and this goes to the rest of the panel, is there a chance that since we import so much food that there might be a humanitarian crisis like President Pastrana said a few days ago?
Okay, thank you. All right, the first question from Eloy. What's the roadmap, Francisco Rodríguez, to get from here to there in terms of a price system?
Sure. Look, I mean, whether I have a roadmap or not, I think that what I have is some ideas as to how it is that you should tackle this problem and what it is that you should try to tackle first. Now, right now, what Venezuela has, there are essentially 2 things that it has to do. It has to solve these relative price problems, which is going to give it a boost to the extent that it can channel the resources that are being channeled to capital flight, actually channel that into imports. If it does that, then what is currently happening in Venezuela is that you are subsidizing cheap dollars and cheap gasoline through inflation tax and through what we economists know as financial repression tax. So you have 17% of GDP that's going to pay for these cheap dollars, cheap gasoline, and cheap electricity, but people are paying for that. That's actually something important. When Venezuelans receive their salary, that salary immediately, the clock starts ticking and the real value of that salary is going down continuously. And anybody who has savings in the bank is also seeing any of those savings completely eroded. That's how government spending is being financed, which goes a bit to this question of why doesn't the government just maintain these price controls? It doesn't work for them politically. Well, the problem is that to maintain this set of distortions, you have to print at least 10% of GDP a year. And with the falling oil prices, it's going to be 20% of GDP a year. That means that you're going to be in hyperinflation within 2 years. But what it also means is that you have the chance, by stabilizing the currency and by setting these prices right, to stabilize inflation relatively rapidly. And yes, people are going to not like the fact that they have to pay more for gasoline and that they have to pay more for harina pan. Now, it's a fact that with the harina pan, they already have to pay more because you can't find it, and then they have to buy it from the buhoneros. And the price that you would have if you set the exchange rate at an equilibrium level would not be that different from what people are paying right now at the buhoneros. And yes, there are some people who are standing in line, by the way, sacrificing a lot of time. Venezuelans on average are spending between 6 to 8 hours a week in line. There are people who are doing that and are benefiting from the low price, and you can perfectly well, within this system in which you are reallocating a significant amount of resources, use a big chunk of that in order to subsidize those people who are losing out, the poorer groups, through a direct transfer mechanism. And one of the ideas that I've discussed is the possibility that you could actually have this transfer system where people can buy discounted essential goods through a card, a discount card, to have the money in that card actually come directly from the gasoline prices, so that when people see the price of gasoline going up, they're not complaining because the government is charging more. They're happy because they're going to be checking their balances on their card, and they're going to be seeing that they got more money deposited on the card with which they can buy the cheap harina pan, the cheap essential products, or they can get a substantial discount on that. That would permit the price adjustment, and it would make it more efficient. Which is what I'm saying essentially is that you have a way to rechannel the resources that you get from the adjustment into that subsidy program, because given that Venezuelans are paying through this by inflation tax currently, that they're paying for these subsidies, there's going to be a cost, which is paying more for these products, and there's going to be a benefit, which is higher real wages. Now, that solves that to a certain extent solves the problem that we had last year. I mean, we had this problem at $90 a barrel. Now we have $40 a barrel problem, which is another $40 billion problem. And in order for the country to continue doing what it was doing last year, which was not good. I mean, Maduro ended last year at 23% approval ratings. You need $40 billion. So how do you do that? Well,
You cut the imports of scotch.
well, you cut the imports of scotch. Yes, exactly, and that's why you have to get rid of these exchange rate distortions, so that you're not giving dollars for cheap scotch. You're not giving dollars. I mean, if somebody wants to buy scotch, then let them pay the market price for that, and the market price for that is the market clearing exchange rate, and the market clearing exchange rate reflects how many dollars the government can effectively sell. But that's part of how you do it. You actually set a price that's consistent with whatever with what the revenues of the country are, and then look. No country that no oil exporting country right now is trying to adjust to 40, and it would be very inefficient. I mean, the only reason why you should adjust to 40 is if you actually have effectively no savings. Is if you have to. I mean, this is like if you know you and your wife, you both work, and one of you loses your job. What do you do? Well, yes, you have to adjust, but do you say, oh, you lost your job today? Then that means that we have to move out of the apartment tomorrow morning. No, I mean you look. How many what do we have in terms of savings? What's our strategy here? Well, do you have to look for another job? Do you have to find another source of income? Yeah, sorry. Well, I mean, yeah, so a roadmap, come on, it's a complicated road. It's a
No, I
lengthy
know,
road. Yes.
but look at all the
Okay,
people here.
should I have taken the question? No, but the point is that you need this alternative adjustment strategy, and I think that if you go to international markets, the international markets can be bondholders, but international markets are also the Chinese. The reason that the Chinese aren't lending more is the same reason that bond markets aren't lending more, because they studied the same economics that we studied, and they know that currently the system is unsustainable. They're not going to lend money to a country that's giving away $50 billion and essentially giving away dollars to its population. So if you effectively design an adjustment program where you cut some of the imports, where you use some of your savings, which Venezuela does have assets which it can use as savings, then I think that you can get international markets to lend you. You don't have to adjust to 40. You can adjust to 65, and you can finance some of that. And then if effectively prices stay at 40, then you do a gradual adjustment to 40. You don't do the adjustment in 1 year.
Thank you. I know it's complicated. I'm trying to strike a balance between complication and time. Yes?
Yes, some brief comments on the issue of sort of the political economy of the adjustment. I think that the Poland analogy is interesting because I do think that at this point we have some levels of distortion and imbalances that are close to an economy like that. But one of the issues that I think is very different if Maduro's government tries to implement it is that, the credibility of a government that has, that every single time has pursued a strategy so wrong-headed to get, because in Poland there was a new government and, Jeffrey Sachs was the advisor. So maybe they hire you.
But in Brazil in '94 it was a very weak government, actually, the Itamar Franco government.
Sure, but they in the case of, but they didn't have to sort of, they did it was more like in Argentina, an exchange rate-based adjustment, a little bit different. But yeah, I think there is some. But Cardoso had also some reputation of being more a sensible guy, although he was not an economist, etc. But in any case, I think that's a big problem for me. That the government, doesn't have a credibility to implement a serious adjustment program. The other, issue that I wanted to mention is that we all thought that hyperinflation was impossible in a country like Venezuela because, you had the opportunity to devalue and finance yourself, and that will mean high inflation episodes, but not hyperinflation. But these guys are doing it so badly that we have at the risk for the first time of hyperinflation, and things might, get into that to that point. Then, after hyperinflation, I do think that there is a tremendous opportunity for an adjustment that will be accepted by the population, et cetera, because that happened elsewhere in the world. And in fact, the ministers that implemented them all ended up being elected, like Cardoso, et cetera. So you might want to be there after the hyperinflation, not before. The other point that I wanted to make about the exchange rate control, Aristobulus Touris said one time, if we take out the exchange rate control, nos tumban, they will overthrow us. And I think that a lot of people in the government have that notion that this is a spectacular political tool. That it allows us to manage, who receives dollars or not in the economy. It makes us able to control the private sector, and so it's impossible to get rid of that. So I think they might, do something, but totally getting rid of the exchange rate control, I almost see it as an impossibility.
Thank you. Russ, the question about is there an impending humanitarian crisis in Venezuela?
I think I would think that we already are in a humanitarian crisis in Venezuela. The latest statistics are that any gains in poverty that we had in Venezuela have basically been erased.
You mean in reducing poverty?
In reducing it, yeah, not only have the gains been erased, but the population, the latest figures that have come out from the World Bank and IMF this month, it's now back up where it was before Chavez took office. So the Chavismo gains have been erased, superficial for what as they were in some senses, because they tried to skew the statistics by counting things that we wouldn't necessarily consider being associated with poverty. But it also built a loyal clientele in terms of rent-seeking people who could buy things at the cheap supermarkets. And now you see those people lined up at the supermarkets and pretty infuriated because they're not able to get in and waiting for 6 hours. So what did the government do? Rather than get more food to the supermarkets, they banned them from lining up overnight. And they go after places like Farmatodo, places that are actually running as efficiently as they can. The other things that both Franciscos were saying in terms of helping people is that they will have to do more missions. They will have to raise the oil price, the gas prices, and there's this myth that they can't do it, and it's become the Venezuelan third rail of their politics, if you will, that you can't raise gas prices because under Cap 2, under Carlos Andres Perez, there was the Casa Raso, there was riots and everything when they raised the prices because it was before payday and people couldn't pay their bus tickets to get to work because it was the last day before payday. But actually, after that, they did raise gas prices at the pump in 96 to 98, and then they did it again under Chavez in 98 to 2001, but they did it surreptitiously by bringing in unleaded fuel. Before that, they weren't using unleaded, so they started using unleaded, and they charged a higher amount and did away with the lower regular. So they have successfully done it in Venezuela, but it has this myth of being their third rail. But I think that they know that they have to do it and that they will. The other thing that I wanted to mention was that, well, I think that I've answered the question. So.
Thanks. Richard?
Well, just a brief final comment. Well, I think that what we are experiencing right now is a situation in which that calls for a correction in prices, but also about the mechanisms that govern the economy, and a government that is not committed toward that direction. So at the end, in the short term, it seems like what we could expect is a devaluation, basically, and not and further changes will be, dictated by the circumstances, but Maduro himself doesn't seem to be committed toward a path of reform, which it makes the situation quite complex because it adds to the lack of credibility that Francisco Monaldi was mentioning, and the other problems that we can face in a situation in which we have the structural problems of the economy and uncertainty about the oil market. But I think that it's going to have then a political impact because, well, what we have been experiencing is what we have been seeing is that the popularity of the government is decreasing, and then we're going to have at the end, there's going to be some kind of adjustment. It could be in terms of the economy, which if the government doesn't take any action, will translate into a larger contraction and higher inflation and other economic problems, but it also will have a political consequence. And then the question is, how will that be resolved, if it is in the elections and the National Assembly and beyond, or if it's going to lead to any other kind of solution or result?
Thank you very much. I just want to ask for one piece of data from Francisco Monaldi. I think it was you who said that the United States was the biggest customer or the biggest importer. Was it you of oil?
Still.
But I had thought let's put it this way: U.S. imports of oil are like cut in half over the last year. Not necessarily from Venezuela. That's what I wanted to clarify.
No, from Venezuela, there has been a big decline. But remember that the U.S. Totally declining its imports of light oil, not of heavy oil. So it's importing a lot from Canada and Venezuela still. But yes, Venezuela
Canada taking over more. I mean, we're importing, we're increasing imports from Canada and decreasing from Venezuela. No.
Correct.
Yeah. Okay.
Yes.
Okay. Well. First, we have reached the end of the first panel. I think you've got a lot of food for thought in terms of the wealth of information and interpretations that you've gotten. We will now have a coffee break of 10 minutes, and then we will proceed with our political panel. So please join me in thanking the panelists.